Turkey's economy is expected to rebound next year after a slew of measures helped stabilise inflation and growth this year. The central bank's taking steps to ensure there's enough money available for companies as their businesses pick up. The bank is easing reserve requirements for lenders that are providing more new loans. It's introducing incentives for banks to lend more to certain businesses for longer durations. And many investors expect the central bank to lower interest rates from the current 14% when it announces its monetary policy later this week. And Turkey is currently hosting the Organization of Islamic Countries Investment Conference here in Istanbul. TRT World's Mobin Nasir caught up with the head of the Presidential Investment Office, Arda Ermut, and asked him how recent steps taken by the government and the central bank may impact investments in the country.
When you look at the central banks of the developed economies, you can see that rather than tightening policies now, most probably with regard to the expectations of a possible recession for the upcoming year, they are going to a way of fiscal expansion policies. This is why, as Turkey also, since we are trying to decrease the cost of financing and at the same time having a model of economic development, especially for the last 2 decades, based on mainly economic growth, fast growth dynamics. Turkish central bank is also taking more or less the similar steps to decrease the interest rates, to make the financing more affordable, and at the same time to boost especially the growth side of the economic development. We foresee and at least we plan to have a recovery process of 2 years, which aims to recover back the 5% growth rate. So in order to achieve that, the fiscal policy side was also critical, and we can at least see that the central bank is also taking its steps according to these plans too.
Now, specifically, which sectors is the government trying to attract foreign investments to?
Of course, some criteria are critical. First of all, the value addition that these investments will be doing for our economy, especially for some critical sectors, for the supply chains of these sectors. The value addition is critical. Job generation is definitely important it is important for every country, and of course the volume of the investments together with that, and of course its contribution to the trade balance of Turkey is also very critical. As you know, when you look at the last 2 decades of Turkey, you can see a considerable improvement in many areas of the economy, the growth rates, the exports, the foreign direct investments, but we have still 2 challenging points. One of them is the low amount of savings, and the second is the more important is the current account deficit. When you look at the policies of Turkish government in many different sectors, you can easily see that many measures are being taken, many steps are taken in order to address this challenge of Turkish economy, especially the current account deficit. And when you look at the incentive scheme of Turkey, when you look at the policies about foreign direct investments of Turkey, you can also see the effects of that too, especially for the sectors which makes the biggest contribution to the current account deficit. We are especially working on these sectors, the missing points in the supply chains of these sectors, and trying to fill this, because these are the areas where the scale is the best for, first of all, foreign investors, and these are the areas where we need these investments, foreign investments, the most.
Now, the IMF expects 70% of the world's economies to slow down going into next year. What is your outlook on the Turkish economy and specifically on investment flows to the country?
As you know, in the in the second half of last year, we had a turbulence in economy and Turkish lira depreciated in a fast level. Then we started to have a kind of a slight recovery. This created some problems for sectors like real estate, but also created some opportunities too. Thanks to these opportunities and also some steps taken by the government, for example, to provide citizenship for real estate acquisition over $250,000 or some measures taken in line with that. Last year we had $6.5 billion of foreign direct investments only in real estate. This is a historic high number for this sector itself, but also it shows that from time to time, depending on the different developments, either temporary or long-term developments, some sectors can appear as an interesting contributor to foreign direct investments too.